Welcome, everybody, to Murdock Manwaring Company's Just the Stats, our regular monthly market update on the real estate market here in Southeast Idaho, where the team here talks about what's going on in the market, and we let you listen in and learn a little bit about it. So thanks for joining us. By the way, if you love these stats, please like and follow this channel, subscribe, and then also, if you'd like to get these stats in your email, go ahead and go over to mmcidaho.com. Up at the top, click get the newsletter, and you can get these in your emails every single month. All right, well, let's get started. Again, we are talking about March 2023 on the stats here in Southeast Idaho. And what we're going to cover this during this video, if you're wondering how long it's going to take and what we're going over, is we've got an overview of the stats. Then we're going to hit a snapshot of the month. Then we're going to talk about the current inventory. And then we're going to talk about just the Idaho Falls area and what does that look like specifically. Jeremy, start us off.
Let's get rolling. So last year of 2022, in the month of March, in these three counties that we kind of keep track of, there was 194 homes that sold. This year in March, we saw 175 homes sell. So we had a decrease of 10% of the number of homes that traded hands. So
by the way, that is up from being down from last month. So we were down more last month. So I don't know how that works.
Exactly. A decrease in the decrease, so to speak. But here's a good thing to try to remember. Under 500,000, there was 147 transactions that sold. So that segment and price point of our market is still really hopping. And you can see the average days on the market is quite a bit less than over that price point. And so if we had to separate, where the active things are, it's really the lower under 500,000 end of things. And there's still a lot happening, 147 compared to 27 over 500,000. And we'll talk about that a little more on the active and what we're seeing as far as some stagnation in some places and what's really going and what the leading indicators are. Because we are seeing activity, but some of the lagging indicators are showing that not as much as in some price points. Average price per foot. Last year we were seeing $180 a foot. This year we're seeing 165, or a decrease of our average of $15 a foot.
So I might mention just a little cute stat about that is when we're comparing last year over this year, we only had one home sell over $800,000 in March of this year. There were 7 last year that sold over $800,000 in March of 2022. So
good. Yeah, that's good to remember, that just because the overall average, is showing a major, not a major, but a significant decrease, that the price is really, if you're in the market, you're feeling different things at different price points. So here's the year to date. So as we looked at March, we saw a decrease. For the year to date, January, February, and March, we're seeing a decrease as well, but not as significant. Mike, earlier we were talking about that number. What was last month's year to date? Does anybody remember that? Wasn't it 32?
Yeah, it was about 30, 31, 32.
So there's the decrease of the decrease. We're seeing less of a decrease.
It's slowing.
Yes, it's slowing in terms of decreasing quicker. We're seeing more activity right now because we have more homes that sold. So we're trying to catch up, and that's what's been happening, is catching up from previous months, I think. So average price compared to last year, we're seeing $394.04. I hate to bring it up every month, but Chad is not a future teller. He did predict we'd hit 500 last year, and we didn't. So nobody knows what's going to happen, even the great Chad. But one day we might.
This is the first time Chad's ever been wrong, so this is unusual for him.
Yeah.
Well, I mean, realize they changed rates just to make sure I would be wrong. Otherwise, I would have been right. So
good job, Chad. Stop talking about rates.
You keep forgetting about what happened once I said that.
Well, I will also mention, as we get a little further into the slide, Chad and I kind of talked about this yesterday. Ooh, there's some indicators that So
we'll talk about those, but that is a 10% decrease in the average. That doesn't mean that your house is worth 10% less. It just means the ones that are selling are 10% less, right? You want to talk about that, Jess, or is it next?
Yeah, just that we remember as we look back at what sold in that breakdown, there's less selling at that higher end. So that's going to bring the average sale price down, not of what a value is, just what is actually closing. People are not buying the higher end homes as of March of this year. So that average was lower.
Yeah, because that is just the month of March. So this next slide that we had up is the year to date, and we're not seeing quite as big. So that's 7.5% year over year for the year to date. So again, to get specifics of your home in the market, you want us to take a look at that for you. Original list to sell. You listed 100,000 last year. You could expect 101,400. That's how this works. This year, we are seeing some more willing sellers entering the market and accepting offers lower than their original ask price. We're seeing.
I think this is a good one to also put a little pin. Next month, I want to watch that list of sold because we hit the rate change last year, right? So we're going to start to see that 2022 probably look a little closer.
Got it. That's great. So that's for the month of March of 5.5% nearly. But the year to date, we're seeing a solid 6% off of that. So that is bringing in the previous to the rate change last year for the year to date average.
Both of those are up from February though. The list sale price ratios, both of them are up from last month. Though.
Right, correct. Yeah, it was about 92. Ashley, that's correct. Yeah.
Good point.
So this is where I think that it's really interesting, where we see some really good indicators is our days on market. So as we look at days on market, last year we were at 19 days on market. How long did it take somebody to get under contract? We're at 60 days now. And so as we look at 60 days, that puts us at a 215% increase just from last year on how long it takes to sell a house. And if you look at our year to date, we're up from 25 days on market average year to date to 61. That's still 144% increase. If you want to look at some really interesting numbers, let's look at it historically. If you look back over time, last year, 2020, look at those numbers down there. 2021, our hottest market ever, average of 23 days on there. And that's an average for the entire year. Well, if we take a look, if we're now at 60 days, we're back into that 2017, 2016. But remember, still real good, because look at these historically. You're hitting we were at 127 days in 2012 on average days on market. And if I took it all the way back to before the crash and where we're looking at all these things. So we are still, it is not scary time. We are historically still normal.
Only feels long because of, the craziness of the market during the pandemic, which is abnormal. Now we're back to a much more stable and normal days on market.
Correct. I want this slide to people to go, oh my word, 60 days on market, crazy. Nope. Look at it historically. Same thing kind of with interest rates. Don't get crazy about 6%. Historically, really good rate, really good rate. So let's talk about overpriced. We've talked a lot about this as we've had this big change and what tells the truth about how your house is overpriced. This is really a conversation we have when we come out for a listing appointment. If we take a look at the average home here in the 3 counties, we're looking at 2,400 to 3,000 square feet. It's got 2 or 3 car garage. It's on a 1/4 of an acre to a 1/2 an acre. It's got at least 2 bathrooms. That's the average middle of the road home here in Southeast Idaho. Well, last month, that house is selling at $142 per square foot. 15 of them sold. In 2022, it was $174 for that same house. So that'll give you an idea of the change there. Now, if you take a look at what's pending, which is the most recent information, what's current, we don't know the final sell price, but we know what it took to get an offer. Those offers, interestingly enough, are at $140 per square foot. So if you're saying our price is coming down, there's a little balancing and normalizing of prices from sold to pending. Then you go back, it's what's sitting in the market for these homes. There's homes sitting on the market at $151 on average per square foot. So if you look at the difference on why your home isn't selling, if you're sitting in that active at 151, knowing pendings are at 140, they're selling at 142, you're overpriced. That's probably why you're not selling. In February, we were overpriced about $24 per square foot. But look, we're only overpriced about $9 per square foot. I think our sellers are learning. We're getting more comfortable in this market, and we're getting to that right price, which really is what brings you your offers. We are seeing a lot of multiple offers right now.
Well, I think that's why the list to sale price ratio went up this month over last month, because sellers are a lot more in range of where they should be to be competitive in this specific market.
Yeah. Absolutely. We learn. It
This
takes
is
us a
for
little while,
March,
but we
right?
learn.
This is for March of
March.
yeah, yeah. And so we're
Correct.
seeing the pendings that are lower than the solds. So we're probably going to see the solds drop.
Yeah. Yep.
Which is-
Exactly right. We'll see
We
that
were
next
just-
month.
We were just talking about this morning on how we're surprised that we have been seeing multiple offers in the last four weeks.
Yep.
And,
Yep.
and not just on one or two properties, on a couple. So
If you will price correctly, the buyers are out there. We'll get into that in inventory here in a second for sure. It is still a excellent time. In fact, right now, a hot time to sell.
It's turned hot. Yeah.
Yeah, it has. So let's talk about a little
Unless
bit
you're
of
over
snapshot.
600,000.
Right. And over that, and I think that you got to be more aggressively priced because you're
Yep.
more of a buyer's market. So you got to know
Yep.
that. Again, pricing correctly will get you in the pocket. In March of this year, 213 homes came on the market. So we're actually an increase. We were pretty low of what came on the market last month. Well, snow is melting. People are getting their homes on the market. So we're up 28% over last month on an average list price of $447. Original to, if anything that came on the market that sold, they were at 99.21. So if you came on the market and sold in the same month, which means you did a normal quick sell, you were getting almost 100% of what you asked. So if you price it right, you get the money. It's about pricing right. 196 homes was pending, which means it added a little bit to our inventory because we got more on the market than went off the market with pending, and 36 fell apart, which is pretty consistent with what fell apart last month. If we take Chad, why don't you pick it up from here?
Okay. So looking here at the snapshot of March as far as withdrawals. So 45 homes withdrew, and that was average days on market of 72. And we typically see that if they withdrawn or they're expiring, they're going longer than the average, and they're realizing, okay, this might not, their motivation's coming out. And the average price per square foot is higher than the average sell-in price. They're overpriced, and it's at 97% is what they're having one price drop about 3%. It's not enough, and they're not selling. So moving on to expireds, we had 34 homes expire. We're seeing the same thing, but they're priced even higher. Average days on market 134. They sat and sat and sat, and during that time, they only dropped their price 2%. Average price per square foot 185. You're one of two homes: the one that sells or the one that helps other homes sell. And these homes that expired helps the other one sell because they're overpriced. So let's move on to section 3. So we're going to look at our current inventory that we have. And that is basically currently on the market, we have 381 homes. Last month, we had 391. So we actually have less homes on the market. We're seeing that. We're feeling that there's less because we're seeing a little bit more activity. We're seeing a few homes with multiple offers. And so it's down, the inventory is down 3%. Average days on market 82.
So Chad, could I ask a question since we've got agents on here? I know in the last month, I've had 4 listings with multiple offers. Are you guys feeling that as buyer's agents in the market? Are you having to compete?
I've had 3 this week that were all multiple offers.
Yep.
So if sellers are like, I don't think it's like that anymore. If you'll price right, it absolutely is. Inventory is low.
Because there's a big gap right now. You have the overpriced. Look at the average home on the market's listed at $188 a foot. 164 is the sold price, and so there's a big gap. So if you're priced correctly, you're going to move. The other ones are just going to sit, and we're only sitting at 2.2 months of inventory absorption rate. So it's still a strong seller's market. The sky is not falling. The bottom is not falling out of the market. So it's strong. If we look at the current active inventory.
Ashley wanted to say something there. I think
Ashley.
Mike. Oh, there she goes.
Yeah.
Why don't you mention, the average for a absorption rate for a seller's market versus buyer's market real quick as well?
You want me to mention that?
Yeah.
So that is a great tool for us in the real estate world because we're always trying to figure out what type of market we're in. Are we in a strong, because if there's low supply, then that is a seller's market. If there's a lot of supply, then it's a buyer's market. And so, you try to wonder which market you're in, but we are in a low supply market still. We are in a more healthy low supply market. Before we were in extremely high seller's market, but we're at 2.2 months. Once we get to that 5 or 6 month mark, that's what's considered a balanced market. Above 6 months is considered a buyer's market. We lived in a buyer's market from, 2008 until 2013-ish, somewhere around there. And now we've been in a seller's market since then. So bottom line, we're in a strong, healthy market. Nobody can say otherwise. We're in a way healthier market now than we were 2 years ago.
And we had consistently, the stats on this slide were almost exactly the same last month as they are this month. So it's holding strong, and which is a low inventory market.
Yep. All right. So as far as a look at what's active on the market right now, what I will mention, what I find interesting is that above $600,000, we only had 13 homes sell, okay, last month. There's over 100. There's about 110 homes for sale. So only 13 of the 110 actually sold. So if you're above $600,000, you are in a slow, I mean, odds are you're not going to be the one that sells unless you are being really strategic. That's probably my biggest takeaway from this slide this month.
Well, and take a look at those days on market and that upper end.
Yeah.
They are
totally.
sitting.
Yeah. If you're, above 2 million.
Yeah.
I mean, our triple digits start above 800,000, and you're kind of sitting there.
Almost 7.
Yeah.
Yep.
And most of the activity of the sold happened below that mark. So
That's right. Here's a look at new listings over time. Basically, we had 213 new listings pop on the market in March, 167 in February, 236 in January. We had a great January, but it's kind of slowed down a little bit. We weren't expecting that to be, any higher. January was a surprise, but overall, we're not complaining. Again, we're trying to get to a healthier market.
Chad, I have a theory on January. I think there was a lot that expired and came back.
Yes.
And so I think that's jive that Jeremy was very healthy. That was why the new listings were.
Yep, we did see a lot expire. As far as currently pending, we have 263, average sales price of 441, original price to current 97.4. So we're seeing some reduction in price. Average price per square foot is about 171 bucks a foot. Average days on market 59. So that is the way our market's moving right now. Lastly, let's look at the snapshot of Idaho Falls. And when we say Idaho Falls, we're looking within the boundaries of the 5 Idaho Falls high schools: Skyline IF, Thunder Ridge, Bonneville, and Hillcrest. So homes sold in March, we had 159 homes sell in March. That's up 27%. And the average days on market of 57. Original list is sold at 96.4%. There's currently 238 homes on the market, and they're at about 76 days on market. We always see the active days on market being higher because it's averaging in the ones that are, not really selling. And absorption rate in Idaho Falls is at 2.1 months. So pretty much the same as everywhere else as far as absorption rate goes. So, all righty.
And that's
That's
stats.
the stats. We whipped through them.
Yeah, thanks for joining us.
Pretty good time. So thanks for joining us. We plowed through, we fire hosed you with a ton of data. If you need us to explain more data, explain how it works, trust us, we are in it all the time. We're still learning. So call us. We'll be happy to explain to you what it means in your price range. We'll be happy to tell you what your price range is. A lot of people think they're in a price range and they're in the wrong price range. So we always say with good information, you can make good decisions. And that's why we compile this data. Yeah. Anybody else have anything else they want to share or say?
Awesome.
All
right. See everybody next month.
See you next time.
Thanks for watching.